Shares of Allied Technologies rose 4% to 60.36 Rand after the telecom and IT firm said it sees improved earnings in the second half of the year and that it will buy a controlling stake in European firm Set1, a maker of digital video set-top box receivers, for 3.96 million euros.
Altec, market cap of 6.1 billion, price earnings of 13.8, dividend yield 6.1. Drikus, there are two big areas, Autopage and Netstar, which is sort of over 70% of their revenue, both sort of ex-growth. I mean, growing at 6.3 and 5.3 respectively. We saw Remgro last week before, announced that they sold Tracker for 1.2 billion. They've got some challenges in terms of growth going forward.
Yeah, C-Track is giving them some headwinds at the moment. You know, they've got a better product and they're losing market share, absolutely. And ex-growth is absolutely the right way to describe both of those business units. And you can see this is a value play actually at the moment. It's got a nice dividend yield. The market, they actually guided the market much lower. You know, they guided the market, I think 2 weeks back with a trading statement, and the market got a bit shocked, and this is why the share jumped 4%. Not good results. It was the East Africa.
Less bad results.
Less bad results. But it was the East African division that knocked some once-off costs, and they said this won't be repeated in the next 6 months. So you're still looking at a share that's reasonably priced and a good dividend yield. But the problem is, Altec Netstar, you know, we've hit a plateau, if I might call it that, in vehicle sales, and they need vehicle sales, stronger vehicle sales for that to really lift off. And we've got 115% cell phone penetration in this country. Where's Autopage growth coming from? There's a lot of competition in that market. You know, the networks are more inclined to do their own, marketing, direct marketing to the clients. So they're actually competing with their suppliers. You know,
suppliers and competitions to make
competition, you know, that's a difficult environment for them to be in. So you see margin pressure, and I'm not seeing really the revenue side growing either. So definitely a mature market, and if they don't look across the borders more aggressively, I won't be owning some Altec anytime soon.
And as an investment holding company, it trades at a discount to NAV. How do you feel about the valuation gap of Altec?
Well, if you want to be in those businesses from an investment holding perspective, you'd rather own some Altron, they own Altec and buy some PowerTech. If there's any upswing in business spending in this country, in investment in infrastructure, then you'd see those two divisions or those two businesses do really well, and they haven't done that well. You know, there's a lot of upside in this. I'd rather use Altron, or rather buy Altron than Altec at this stage.
You mentioned East Africa. They had a bunch of costs there. They also got rid of management. They said management weren't performing. We'll give them the credit there and say they picked it up timelessly. They got 6,000 odd kilometers of fiber optic cable in the ground. And Kenya's a crazy market. I mean, the regulator went in and actually put a floor on mobile calls that you can't go lower than it because there was such intense competition. I almost get the sense, I mean, if they can start to get that right with the CCOM cables and the like there, that might be their savior, but there's a lot still to happen there, and it hasn't performed yet.
Simon, this is mismanagement. It wasn't anything other than this. I think the CEO hinged at that as well when he did his report. Mismanagement, I think there's a lot of scope there. It's still a small part of the business, so I won't get too excited about owning some Altec yet, but I do see some growth going through there, but it will only mitigate some of the slow growth that you'll see in the bigger divisions for time coming. Until that's not the bigger part of the business, I won't get excited about the share.
We're seeing also, I mean, we can touch on, I mean, operating margins are down at 6.1. They were previously 8.2. They were previously 10.1. We could absolutely see which way that trend is going. We've talked about the need to get things right. Their debt level's relatively low, 470 odd million. They've got 270 odd million cash on hand, down from 460. It's not too bad. 1.1 billion goodwill. The balance sheet's all right. I wouldn't call it the strongest, but certainly I've seen a lot worse in this environment. Yeah,
definitely from a value perspective, not the worst company to own. You know, there's a lot of cash, good dividend yield, and the thing is, you know, a downswing in the economy won't really hit them from these levels. Now, it is a defensive market that they're in both the markets. You know, or let's say two-thirds of the business are, you know, it's annuity flow there, but the problem is that it's mature, and if you're looking for some growth in your portfolio, you know, you get growth stocks out there that's trading at valuation levels that you know, you can brand them as a growth and a value stock. You know, you don't need to buy stock at these levels that's only a value play.
Just keeping with the financial sector theme that we've had going tonight, with the acquisition of Ayenza Mobile Money, are we not concerned that they're not maybe playing in the space of Capitec and Able, because they are marketing directly to previously unbanked individuals? It's the lower end of the finance sector, but Altech's business isn't banking.
Well,
what value can they add to Ayenza Mobile Money?
It begs the question, do you stay with your core business or do you move in? I think these guys, I do think these guys, actually, they're a good technology company, and I won't like them moving away from that. If they can focus on the convergence business, on the data side, get East Africa in order, there's a lot of scope for them to be the Altech of all the powers that we know them to be. But it's starting to mingle and non-core businesses, I don't like seeing that.
Maybe they're just diversifying their revenue streams. Can't fault them for that.
Anglo has been there before. They've said no, thank you.
So how do you feel about the stock then overall? Hot or not?
Not so hot, no.
Not so hot for Drikus. Simon Brown, Altech, hot or not?
Autopage, Cellular, Netstar, they're big businesses, completely ex-growth. I can't see anything exciting happening there. A lot of exciting new ventures and the like, but gone poorly, very, very small. Going to be some while before something happens. Yeah, great dividend yield, 6.1. And if you're holding it, you're getting paid seriously well to hold it. I wouldn't rush out and buy it. Not hot for me.
Not hot for Simon. Drikus, why don't you give us your hot stock pick and warm things up for us?
Well, because we're on Capitec, I have to disclose, of course, that we own PSG. We are quite overweight PSG. And PSG owns 35% of Capitec. It makes out about 60 to 65%, depending on the market price of Capitec, of PSG's market value. So if you want exposure to Capitec, but you want a cheap exposure, you do it via PSG. If you get all the holding companies in PSG, in order, you get a few other revenue streams for that PSG generates. So one of them would be the management of Zeda investments. Get absolutely free. So I think PSG is trading at a small discount to what intrinsic value is. Now you'd say to me, listen, as an investment holding company, you should be trading at some discount. Yeah, right. But there's always something happening at this company, and I know. And if you do your homework, you'll see there's in most of the subsidiaries, there's something happening, something that some value can be created in the next few years, and a lot of things to get excited about. So it's not only a Capitec story, but you get a lot of other value creating transactions that will happen along the line.
Drikus doing the obvious there from PSG Consulting, his hot stock pick is PSG. How do you feel about PSG, Simon?
PSG's a great company. Johny Lambridis, who started it, is probably South Africa's Warren Buffett. I think the stock has turned 1,000 rand into 1 million in the last 2 decades or so. And he's right, you get Capitec, then you get Curo, you get PSG Konsult, you get
hold
PSG
the stock?
Online. I don't hold the stock.
You don't? Okay.
I've got my banking, I've got my Capitec Direct, and Curo, I want to be a little bit cheaper. But I think if you want a nice diversified, and what you're buying here is the brains. You're buying that deal-making ability of Johny Lambridis and his team in Stellenbosch, and they've proved over the decades they're top. And
the thing is, if you're not sure what's going on at Capitec, I'm pretty sure Johny Lambridis knows what's going on at Capitec, and he's got his his eyes and ears out there, and he'll find a seller quicker than you and I can if he needs to dispose of Capitec. So.
Drikus putting in a very good word there for PSG. That's it for Hot Stoxx, and thanks to our guest Drikus Combrink from PSG Konsult, from me, Refilwe Sisiane, and my co-host Simon Brown from Just One Lap. It's goodbye till next time.